NBI.com. This is John's Reporters for the 16th. Well, no shock after we had the hammer that took place here, where the exuberance of the CPI. And I think that what you're starting to recognize now is the same thing that we started talking about months ago, where this disparity between the government numbers for stuff being reported versus some of the private numbers don't seem to add up. And they're going to start culminating because at a certain point, obviously for the election, things looked really nice. And then we started to get the difference in, well, jobs and things like that. The establishment survey, which was just basically making numbers up because it's estimates and seasonal adjustments, versus the household survey and stuff, which was showing, as much as a million job applicant and or employed difference from the government numbers. And it starts to have a material effect. You combine that with the Fed not changing policy despite the market wanting it to. The market has wanted to rally, there's no question about it, and made every attempt. And we still keep pivoting right around this 4,008 number. And there's been some real concern about whether or not there will be significant constraints to next year, given the likelihood of a recession. I think we already had one. I think it may have been brief, and we may have even sugarcoated the numbers to make it look like it disappeared before it really caught hold. But there's significant headwinds economically ahead, and it's just a question of will the Fed go too far for too long? They always do. So it just becomes part of the narrative. Anyway, we knew from the NBI white spike, literally when we had the spike out day here, we were already white above magenta, and that usually leads to predominant weakness. And typically that would call for a move down to the 50% range. And from there, we would be able to evaluate. The surprising element of it is really almost not much short activity here. Cyan is under red for a large portion of it. Just now, DOC spread, but this is weak. It's trailing off the same as the red. And like I've said before, this was going to have to be a bull rally in the sense that bulls were going to have to make this thing move. And without short covering spike rallies, it's a pretty hard thing to do. And clearly evidenced by the sell off. Um, that brings us, well, right around here, minus about 18% on the year, just under. And it hasn't changed. I mean, you look at the NQ, it's identical. Now, the NQ has reached its 50% number. And, it's fine. It fills in the remaining positive extreme, which really was back over there. We don't have anything else that is relevant to it. But should this remain with the white leading, particularly if the white spikes back up, then I would expect an accelerated move towards the 0%. So that's something to be watching for. From a Treasury standpoint, still pie in the sky, thinking that rates are going to be dropping. So it's a clear indication the bond market believes that things have stopped to the point where there's going to be a change in direction from the Fed. And here we have oil, still in the mid 70 range. It's much more comfortable than it was, but not out of the woods. I mean, it only takes a single event-driven moment to cause that to spike. The fact that we've been seeing repeatedly crude builds, meaning excess inventory, it's an indication that less activity is taking place unless it was met with the counter move of super supply, which really hasn't seen that big a change. This also softened gold's position because if things are really getting as bleak as they are, there's not going to be any inflationary pressures to drive it. And the euro, of course, will skyrocket as it has already, just because they need the eurozone to be looking good post-war. They've recovered, but the EU is a disaster. So, but and that all being true doesn't mean that you can just arbitrarily say, "Oh no, everything has to go to hell in a handbasket." No, it doesn't have to go to hell in a handbasket because the market, we have to follow signals. And those signals can be very contrary for a very long time to the real facts. Um, just go back to 2008, the housing crisis, 2011. There are a lot of other key pointers where the market moves opposite to the direction of the readings. And this would be a perfect example of that. For the last 6 months, the market has moved contrarian to what we know to be uh, continued softening in the U.S. economy. And it's just because of the irregularity of it, which is something we talked about at the beginning of the year. Um, right before we knew, that inflation would get out of control, which seemed obvious to most people who were paying attention, but oh well. Bitcoin still having trouble right around that 50% number. Magenta back down below. So if it rolls over, which it already started to, went from positive extreme back to negative, then we're probably going to see another brief dip. And likewise for ETH, already a little bit more aggressive. That hasn't been quite as strong as Bitcoin has been. And the ETF woes continue. From a 50K standpoint, just short, short, and more short. Nothing to do there but short. 5K signal made it for the easiest day in quite some time. Sell signal came in early and repeatedly, and that was it. Not quite it, but you get the point. I mean, we had the leading white MBIs led to continued zeros. Every time it did, we popped back down to the zero, the brief moves. Literally, we're brief. Couldn't even get to the 50% on that. And when you turn around 50% breakdown with sell signals at 38, I'm in that to a strong move to the downside. And sure enough, it continued to go. And it just repeated that the brief attempts were legit, and Paintbar responded, but they were immediately sold off, and not a shock. And here we are in post market, a little bit of recovery, caught between that 39.38 and 3900. Still haven't made it back down to that fully. We were just above it. The low was right about here. 3909. So within a fraction of actually getting to that algo level. But that's why we have them. And it's beautiful. We hit the peak right there at the 3938. Makes no sense for that to be the resistance point, but yet nailed it right on the head. And that's because that's how computers work. You just don't know the number. But once we figure it out, we're good to go. As always, though, continue to trade well, and we will talk again on the Skype chat. Have a good one.